And Kathleen, several Fed officials have signaled they're ready to hold. How will the CPI numbers, could it potentially play in? I mean, it's only out in the first day of the FOMC meeting.
Well, but you know it's a number that they have been waiting for, right? Remember, since the last meeting when they made their move, many people have commented that, well, yes, I might be open to pausing. Now it's called a skip because we're going to leave the door open to more rate hikes, et cetera. But I'm going to watch three important numbers. We got the jobs report. Now we're getting the CPI report on the first day of the meeting. Plenty of time for them to factor it in and tilt, at least, or finalize their decision. Now you can see on the monthly number a nice hefty drop in CPI. That's what used to be a normal number, 1/10. And the core is 0.4, 0.4, not moving. That's not so good. But if you look at the year-over-year numbers, which are affected certainly by base effects. In other words, the numbers were so high last year. They just have to look lower now. 4.1, that will be the estimate for the headline CPI. The core CPI year over year expected to come in at 5.2 from 5.5. So let's move on and look at one of the big drivers here. And that is commodity prices. That's something that is coming down. In fact, energy prices actually fell 3.1% last month. And that is a big part of what we're seeing here. So that's good. But commodity prices go up and down. So you also want to look at core prices, services prices, and in fact, core services. Now, we know that services prices have been coming down, and the core services as well. It's the super core. It's the green bar, which has already come down. If it is, Bloomberg Economics is forecasting it will come even further down. They see it hitting in May, the lowest in September of 2021. And remember, this is the number that Jay Powell watches so closely. That's why people have come to call it the super core. It's core services, take out housing. That's what you get. The big story today, one of the most read on the Bloomberg terminal, a city strategist warning that traders are actually underestimating just how good this number is going to be, how much it's going to drop. We'll see if they are. It could be that that it's not that they're overestimating or underestimating, Heidi. Maybe it's just that they're not quite sure that's going to happen and they want to hedge their bets for now.
The Fed seems to be backing away from wages when it comes to a major driver of inflation. Does that play into the decision?
Well, to a certain extent, it certainly could. Definitely some research out of various Fed regional banks have come to that conclusion. Not that it doesn't drive it at all, but it isn't as much of a driver. And of course, that would suggest to people who think the Fed is too hawkish and could harm the economy, well then, hey, you don't need to hike rates. It's not going to help to bring down wages because that's not going to have that big of an impact on inflation. The other side of the coin is, though, when the Fed looks at a hot labor market and low unemployment, they seem to talk a lot about final demand. If you've got a job, if you've got a good paycheck, you're going to keep spending money. Well, if you do that, how can you bring down inflation? Now, what we saw today from the New York Fed's survey of inflation expectations was that near term, over the next year, we saw inflation expectations come down again. You can see they're in a nice downtrend. If you look at the longer term inflation expectations, they haven't come down that much. Now, good news that they've come down for the next year. The problem is that the near term, year out expectations are driven by the inflation that's right in front of you, the inflation you've experienced most recently. The longer term expectations are driven by what you've experienced over a longer period of time. So progress on both fronts. Certainly, I think, regardless of whether you're looking at tilting towards the hike, the pause, or the skip, these numbers are all going to go right into that equation you have to come to make up your mind.